Let's start with the test. Then we'll see how you did on the test. First question, who invented debt? In other words, borrowing money. Second question, what was the original purpose for debt? Okay, jot these down, answer the questions. Now, I got one last big question. I'm going to make this easier. It's multiple choice, okay? So let's say you're in debt. You should, A, pay the debt off as fast as you can. B, take an extra job or two to pay the debt off as fast as you can. C, pay your debt off as slow as you can. All right, so let's talk about this a little bit today. I'm going to talk about 3 money habits that cause you to be stuck. Okay, here's the first one. Most people spend money on expenses. Wealthy people spend money on investments. Just a simple Webster's dictionary definition of invest. Let me read it to you. I want you to think about it. To invest is to commit money in order to earn a financial return. In other words, to commit money in order to have a future return, to make use of it for future benefits or advantages. Now, that's a pretty good definition. Now, what's an expense? I don't think we need Webster's for that, right? It's like paying your water bill, okay? So we know what an expense is. An expense is just paying money for stuff you bought, okay? Stuff that you use up. Most of it's things you use all the time, and you pay money, you use it up, then you have to go buy it again. That's an expense. Here's the problem. Most people really don't think about the difference. So let me tell you the difference. An investment is when you buy an asset that has the potential to create cash flow or ongoing cash flow for you and your family. An expense is you just buy something and use it up, and then you have to go buy it again. An investment is very different. It keeps on empowering your family once you have it. So of all things you could invest in, the very best is right here. It's your brain. And most Americans do not get that. They have bought into this thing that you go to school, maybe even go to college, and you learn to do something no one in the family's ever done. And then that's it. I don't want to learn anymore after that. I'm just going to go get a job for a boss, and I'm just going to do that. So now you're trading your infinitely valuable time for a little bit of that boss's money. And you'll never create wealth that way. It doesn't work that way. There's 2 key things in the Bible that God tells us creates wealth. One is the idea of the family business, and the other is a thing called financial leverage, which we can talk about. To get those things working for you, you have to learn how to do them. And that's called an education. And that's one thing we at TRADEway will do is we will teach you that. It's going to cost you some money, but it's not an expense. It's an investment. It might be an investment out to the 3rd generation because, you know, I'll share with you right here because we do charge for some things. If you had, say, $10,000 in your trading account and you learned this skill set from TRADEway and you did it successfully twice and that made money for you, that would be what I would charge you for that. You know why? Because you can keep doing it after that. You're not just going to do it twice. Plus, you're going to teach it to your kids and grandkids and never pay us for it. Would you even think of that as an expense that, I don't want another expense? Or would you think of that, wow, this is an investment that could pay for a lot of expenses someday? You see the difference? So that's the difference between how most people think of things, everything's an expense, whereas wealthy individuals think, oh, this is an investment I can make that can change as far as cash flow out into the future forever. And that's the thing I want to do. So wealthy people spend more money on investments and less money on expenses. You're always getting paid, so your money is getting replenished every month, right? Take a little bit of that and put it over in a savings account and start collecting money, start saving money so that you can invest that into things that will create future cash flows. Listen, I will guarantee you this. Your job is not the end. It's a means to an end, and the end is for you to own your own business so that you can get financial leverage. We'll talk about that another time, but that's where you need to get. So save some money aside so that you can get to that place. Now, one of the least expensive types of businesses, believe it or not, that you can get involved with is a stock trading business. You know why? You can open a trading account at a brokerage firm for free. It costs nothing. All of this amazing software, free. You could go have a garage sale and raise $1,500, wire it up there, and you could start. So remember, the first money habit that gets a lot of people stuck is they don't know the difference between expenses and investments, and they spend way too much money on expenses and just stuff that they can do without, and they don't put enough money into investments that can create cash flow down the road, maybe for generations. All right, the second one is this. Most people pay their debt off as fast as they possibly can because they've been taught this by, popular radio hosts, for example. I don't know where they learn it, but they just get the idea They need to pay their debt off as fast as they possibly can. Well, what's interesting is the Bible teaches you should pay your debt off last, and you should pay it off with new money that you make through investments. So I didn't make this up, okay? If you will take time later, maybe this evening or something, go into your Bible in the Old Testament and turn to 2 Kings chapter 4. And all of this information that the creator of the universe, the creator of all economics and financial principles, put in the Bible for us to use. The story is about a widow woman whose husband borrowed some money, and he knew the prophet Elisha. And Elisha respected this man. So he had borrowed money for a business, and because God's men back in those days worked with their hands too and made money. They didn't just rely on the church for money. That's a whole nother topic, isn't it? But this man had borrowed money for his business, but then he died, and his wife didn't have the skill sets. So they were in trouble. So the guy he borrowed the money from wanted to come and take her children as slaves until that was paid back. And that's the situation this woman found her in, and she went to Elisha for help. Now that's the background of the story. The first thing it teaches us really is that debt can't be a sin, because this man of God who Elisha knew borrowed money, and Elisha knew about it and didn't say anything negative about it. And so this whole idea that debt is a sin or that it's wrong is not correct. The prophet did not tell her that the first thing she should do is pay the debt off, because she really didn't have any way to do that anyway. If you leave debt alone and you don't deal with it properly, it does lead to slavery. In a sense, you're kind of a slave to the person you borrowed the money to till you pay it off. Not a real slave, but you know what I'm saying. So there is that, and the Bible does not diminish that. You need to realize that if you're going to borrow money, you are going to owe that money to this person till you get it paid off. And that means you've got to maybe change some things in your life to make that happen and so forth. So it can kind of control you. And that's a bad feeling and a bad thing, but it doesn't mean debt is bad, because there's a purpose for it. Remember how I asked you in the test a minute ago, who created debt? You know what the answer is? God. Okay, but more interesting than that, why? What's the purpose of it? What do you think the purpose is? What did you write down in your test a minute ago? Because I've never had in rooms across America where we go as TRADEway and we teach, and I'll ask this same question to live audiences. I've never had anyone get it right. The purpose of debt, according to the Bible, is to end poverty. Now that's strange, isn't it? Because mostly what you learn about debt out there among Christians is it's evil and you should stay away from it. You should never borrow any money. Well, if you've ever heard the story of our family, my great-grandfather got us in the oil business. He saved money his whole life till he was in the 60s, and he had about 20% of the money that he needed to buy the Mahia oil field. He went to a bank in Dallas and borrowed the other 80%, and he took our family from poverty to wealth in that act. He changed our family for generations by borrowing money. And you say, well, that doesn't mean it's right. Yeah, but this passage I'm teaching from teaches that it's right. You've learned these things about debt. It can, trouble brings tears. You can get in trouble. Good things happen to bad people. All that's taught in those first few verses. Now, as you continue into this passage in 2 Kings chapter 4, the next major point is the power of the presence of the personal God. And that is really demonstrated through here. And Elijah said to her, "What shall I do for you?" Now, that is a picture of God saying that to you. And so the next time you get in trouble, I want you to picture Elisha saying to this woman, because this is a type or a symbol of God saying this to you, "What shall I do for you?" All you got to do is answer it. That's called prayer, right? But you answer the question. God wants to know. I mean, he knows, right? But he wants you to know that he knows. He wants you to know that he's asking you that question, what shall I do for you? Brothers and sisters, I want to tell you something. Do you realize that this is revealing a major point to us? Now, the third thing we see in this passage is the power of the possessions we already have. So the prophet asked her, "What do you have in the house?" She said, "We got this little bit of oil." And he said, "Okay, I want you to send your sons out and borrow a lot of pots, containers." The man of God who represents God is telling her to go borrow something. That's contrary to what's taught out there. But God told her, go borrow stuff. So she sent the sons out. They went and brought it back. They could have brought more, and it would have been better for the family if they had, but they brought some. And the man of God instructed them to pour the oil in those containers. Well, what happened as they began to pour the oil, God did a miracle and began to increase the oil enough where it filled all those containers. So however many containers the boys brought would have been filled with oil. That's something we need to realize, is that sometimes when we're in trouble, the first thing God's going to say is, well, what do you have in your house? And that could be things like skill sets that you haven't thought about. It could be things you know. It could be gifts, spiritual gifts God's given you, or strengths that you have or that some of your children have. Take inventory of everything you have already, and God can use that to build on it. The man of God didn't tell her, just go pay your debts off fast. What he said was, well, let's pay them off, but let's wait a minute, because what I want you to do is multiply what you have first. Invest what you have and let that multiply. And once you have the new money, the new oil, take that oil and pay the man off, because then you'll have extra that you can keep. It's wealth that you have for your family as well. Plus you pay the debt off. Because think about this, ladies and gentlemen, if you take what assets you have, you may think it's little or much, I don't know, but whatever you have, and you just pay that off. When you pay that debt off, now you have no assets. You just used your assets that you did have to pay the debt off, and now you have nothing. So what do you have to do? Now you got to go borrow some more money the next time you need 4 new tires or whatever, right? So it's just never ending. Pay it off slowly and keep your assets and invest that into something like skill sets, for example, on how to maybe multiply your money through the stock market, which is what TRADEway teaches. Then take the new money that you make and pay your debt off with that. That way you still have assets to create money, and you didn't spend them all to pay the debt off. All right, and that brings us to point number 3, the third money habit that gets people stuck. And that is that most people are under the idea that the first big investment they should make is a house. That's probably about the worst thing you could invest in if you have skill sets. Now, once you have those skill sets, then a lot of things change. Like all of a sudden, you don't buy products from Wall Street like annuities anymore. You don't necessarily jump out and buy a house as your first investment, because what you want to do is take the cash that you would have put into that house and invest it in the market and make new money, and take the new money and buy the house. That's the idea. Okay, so let me just give you an example here. This is the kind of thing that could actually cause you to lose a little bit of sleep. Your neighbor thinks that stocks only go 2 directions, up or down. That's not right. They go 3, up, down, or sideways. And the sideways movement of a stock, we call that a rolling stock. So it's going up and down between a low price point and a high price point. So this stock was rolling between $22 and say $25, up and down, up and down. Now, if you're a buy and holder, all you know how to do, this is all they want you to know how to do. The best you could do over this 6-month period would be buy it at 22, sell it at 25. So you make $3 per share. Now, if you went to TRADEway.com and you learned a skill set called the rolling stock skill, you wouldn't buy and hold it. Roughly once a month, it's rolling from the buy point to the sell point and back down to the next buy point. So that means you would have 6 opportunities to make $3 per share. So that's $18 per share times 200. So instead of making $600, you're making $4,000 if you just learn how to roll it and play the roles. But let me show you something else. If you got to TRADEway.com and you learn how to do options, there are these things called stock options. You've got calls and puts. Calls give you the potential to make money when the stock goes up. Puts will actually make money when the stock goes down. So look at it this way. If you just had $600 in your account, if you knew how to do options, it's like you had almost 5,000. That's the power you have. So let's look at this same example, and now let's use call options. So instead of paying $22 per share, we're going to pay $2.25 per share. So now you can afford 2,100 shares instead of a couple of hundred shares. You like that? That's powerful. This should make you lose sleep at night. So the first investment is $4,725. You didn't even use the full $5,000 that you have. Now, when that rolls up to a little short of 25, let's say $24.50, you can sell that because the call option grew in value as the stock grew in value. That's what options do. So now it's worth $3.40 per share. You sell it for $7,140. You made a profit of $2,415. You've already made more money than you made in the entire 6 months by buying and holding, or even by rolling it with the stock, because now you're rolling it with options. We call that the rolling option strategy. So now imagine if you keep doing that for the entire 6 months. Add that up, it's $25,120 with the same investment. So you made $25,120 with a $4,725 investment in about 4 months and 12 days. Now, that's a really great return on investment. Just the outright play is a 532% investment. Now, you probably thought if you made 8% a year in your 401k, you did pretty good. 8 to 10%, you did pretty well. But imagine being able to do a 4-month play or 4.5-month play where the play itself is 532% return. You can see the power of skill sets, and that's what I wanted you to see with this example. Because imagine this, if you had that kind of power where you could get returns, what if you didn't get 500%? What if you got half that, 250% return? That's multiplying your money by 2.5 in 4 months. What if you could do that? Well, I mean, would you really want to spend your money on buying a house that sits there and gains a little bit every year when you could take that same money and put it into strategies like this and over maybe a 3-year period have the potential to make enough money to buy a house outright, plus still have your investment money? That's the power of this. So to sum it up, the biggest mistakes that I think people make that kind of get them stuck where they don't grow their wealth is, first of all, they spend their money on a bunch of expenses and don't spend any of it on investments. They don't even invest in their mind through education that would help them learn skill sets to do these kinds of things. Secondly, they want to pay their debt off as quickly as possible, so they use up all their assets that they could put in the markets and grow, and they just pay their debt off with it. And then the third thing is, most people think the best first investment is a house, and I don't think so, not if you have skill sets. In fact, if you check out the links in the description below, you will go out to TRADEway and you will find how to access these skill sets and help your family through generations. Now, let's go back to our test and see how you did. All right, so question number 1, who invented debt? Right, you got it right. God did. So it's not evil, right? It has a purpose. Number 2, what was the purpose? To end poverty. Does it have certain risks that you need to deal with and manage? Yeah, it does, because you need to pay it back. So it has risk, but God's risk-return trade-off is in everything in the universe. It's a risk when you fall in love with somebody and marry them, right? It's a risk when you have children, but it's worth the risk. So then lastly, you're in debt, so you should, A, pay the debt off as fast as you can. What about this? You take extra jobs to pay the debt off. Well, you know what? You can do that, and you will not see your spouse, and you won't see your kids for months and months at a time. So while you think you're making money to pay the debt off, which isn't even the best thing to do with money, you're destroying your family life. That is a bad idea. That's not a God idea, right? And then third, pay your debt off as slow as you can. Well, to me, pay it off as slow as you can, but you do pay it off. All right, well, these are the things that I think tie up people's money. They tie up their hands. They make it where they can't get where they want to go financially. And I hope it's been a real benefit for you. If it has, tell you what, check out the links in the description below. Go out to TRADEway, and we're going to help you with those skill sets. We're even going to hold your hand. We got coaching. We've got live webinars where we pick stocks together and even trade stocks together. It's not going to be scary because we're going to hold your hand all the way. All right. Well, hope you enjoyed the show. We will see you back next time.